Fear just hit a peak. Well, the great thing is that means it's the perfect time to buy.
Oh my God. Okay. For a minute, I thought this was going to get very dark.
Hi, I'm Matthew Carr, Chief Trend Strategist at the Oxford Club. Thanks for watching this episode of Market Trends. And if you're new here, be sure to hit that subscribe button and turn on notifications so you never miss out on my best trading ideas, which I share here each and every week. Okay, so right now, a lot of investors are scared. The Russian invasion of Ukraine has pushed many markets around the globe, not just into correction territory like the S&P 500, but into bear markets. But we have received one of the best money-making signals out there. The week of March 2nd, the American Association of Individual Investors, AAII, its sentiment survey showed 41.4% of investors were bearish. What it means is more than 40% of investors believe the market will be lower 6 months from now. That's significantly above the long-term average of 30.62%. But here's what's surprising. That's the second lowest reading for a bearish outlook since January 19th, right? It's been a very negative year for investors. A week earlier, the bearish sentiment on the AAII survey hit a one-year high of 53.7%. That was the second reading above 50% this year. But moments of extremes are often moments of opportunity. And when the majority of investors see nothing but doom and gloom on the horizon, that's often been one of the clearest money-making signals.
Are you paying attention?
Consider this. Bearish sentiment on the AAII survey was this elevated from March through May 2020. During that 12-week stretch, bearish sentiment topped 50% 6 times. The other 6 were all above 42%. But the highest bearish reading was 52.66% on May 7th, 2020. That was after the S&P 500 had climbed more than 25% from its March 2020 lows. The S&P would continue moving higher, setting new all-time highs until our most recent correction. During the worst Christmas ever for the markets, bearish sentiment on the AAII survey topped 50% on December 27th, 2018. Well, 6 months later, on June 27th, 2019, the S&P had gained 19.5%. Again, on April 11th, 2013, bearish sentiment topped 50%. But by October 11th, 2013, the S&P had gained 6.5%. And if we go all the way back to the financial crisis, during February and March of 2009, bearish sentiment was higher than 50% on the AAII survey. It even hit an all-time high of 70.27% on March 5th, the day before the market bottomed during that financial crisis. 6 months later, the markets were up 41.7%. And of course, that was the beginning of the longest bull market run in history. So the takeaway here is that bears are rarely right. So don't give into the panic.
Oh, thank God.
When bearish sentiment on the AAII survey tops 50%, it's signaled one of the best buying opportunities. It's a contrarian indicator, particularly at extremes. And historically, when optimism is low, like it is now, the median gain of the S&P over the next 26 weeks is 7.1%. And over the next year, the index posts a median gain of 17.9%, right? So this isn't the time for investors to hide their heads in the sand, nor is it time to make the mistake of continually or habitually sitting on the sidelines. This is a time to embrace that there are new opportunities and new profits, to be greedy when everyone else is fearful. Well, I'm Matthew Carr, Chief Trend Strategist for the Oxford Club. Thank you for watching this episode of Market Trends. For more information like this, be sure to go down to the description and sign up for my free e-letter. Until next time, here's to high returns.